run using premium baskets. So in this session, we'll try to take a look at the new set of baskets, that is the premium portfolios which have been launched on the HDFC platform. And we'll also try to understand why we as investors can consider investing in such baskets, what are the advantages, and we'll also take a look at how to go about starting our investing journey in such baskets. So with that said, what we will try to do in this session is first take a look at a brief presentation that we've prepared for you. And at the same point of time, we'll also try to head over to the main platform and we will try to explore these portfolios which have been published there. So now, before we start off, let us first try to understand what small cases are. So if those of you who are new to this particular concept of small case or basket investing as we call it on the HDFC platform, so basket investing or small cases are essentially just portfolios of stocks or ETFs which have been weighted intelligently to track a theme, a strategy, or an objective. So essentially, whenever we call or whenever we mention the name baskets or portfolios, you are supposed to think of direct equity portfolios which are already readily available on the platform. So let us try to understand with an example as to how basket investing is very different from the way of investing that we are all aware of, which we have been traditionally doing for a very long period of time. So most of us, whenever we open a securities account, the first thing that we tend to do is try to pick stocks using our limited exposure to the market. We try to select stocks which we think will maybe go up or go down if you're shorting the markets. And most of us tend to focus on a very short-term kind of or a short-term framework of investing. So this eventually causes more problems and has more problems than benefits, actually speaking. And generally speaking, if we take a look at the people who have managed or the investors who have managed to create wealth for themselves, they've managed to do so in the long run by staying invested in stocks or maybe in ETFs or indexes for a prolonged period of time. So essentially, what we are trying to tell you is that portfolio investing is a far better or a safer avenue to build your wealth as compared to traditional investing, which involves picking or betting on one single stock or maybe two stocks as a matter of fact. So with traditional investing, we have single stock exposure of 100%, and we tend to park our capital there. And some of the downsides of single stock investing are, the first one is when it comes to diversification, there is absolutely no diversification. That concept does not exist, because of which, if the analysis is wrong and if the stock doesn't move as expected, then all the capital tends to go under risk. And it's not just the concept of analysis being wrong here, because it has been proven time and time again that it is not just analysis per se, but even right analysis could lead to the stock price not moving. So with that said, single stock investing is always a very challenging task. Similarly, when we talk about the risk component of things, since you are investing in just one stock here, the chances of incurring a downside or participating in a downside is very, very high, because of which the risk is exponentially higher as compared to investing in a portfolio. So similarly, if we take a look at single side investing, most of us tend to change the stocks week on week or maybe once in 15 days or once in a month and so on. So what does this imply? This implies that there is no strategy that we are inherently following when we are picking up stocks. And this happens to the best of us. So when we try to narrow down on one particular stock, something looks good for this particular week, and that concept probably changes by the upcoming week, and we will try to select another different stock, and this is a never-ending process. So actually speaking, there is no strategy that we are following, but when it comes to investing, it becomes more of guesswork, hunches, and talking to friends, talking to colleagues, trying to get a feeler of the market, and coming up with a position over there. So essentially, there is no strategy inbuilt here. The fourth one is when it comes to lack of research. What I mean to say is the tools or the access to information that larger corporate entities will have before narrowing down on one particular stock is not readily available to a retail investor. And this creates a a hurdle for us as investors to make the right decision by pulling in the correct data points from the markets. And fifthly, usually when it comes to single stock investing, it is a do-it-yourself setup. There is generally no advisor support provided for such kind of investments. So this is where the concept of small case actually comes into picture. So what are small cases and how is small case beneficial? So small cases, as we both discussed, it's a portfolio. It's a direct equity portfolio which is available. So since it's a direct equity portfolio, it has many stocks inbuilt inside of it. So the underlying result of this is that the portfolio becomes very well diversified naturally, which will decrease the amount of risk you're taking in the market. And the second thing, which is also the lower risk component, which we have mentioned here. The next thing is that it is backed by a specific strategy. Now, what do I mean by this? When a small case is being designed, small cases are designed by SEBI registered professionals. What I mean by this is SEBI gives 3 types of licenses in the market. It's called RA license, which is research analyst, RIA, registered investment advisor, and PMS, which is portfolio management services. So basically, an entity which has one of these 3 licenses only can come to the platform and design such portfolios. So these are entities who have basically dedicated a significant portion of their careers to researching on the markets. So each one of the portfolios that gets published on the platform is backed by one particular strategy. For example, we have momentum strategies available on the platform. So if there's a momentum based portfolio, the underlying strategy will always be momentum. Stocks can change, but the portfolio strategy will remain constant. If growth is a strategy, which means we are picking stocks based on our understanding that these stocks are in the growth phase, that will be the underlying strategy. Nothing changes there. If we are following a value strategy where we are picking stocks which are trading below their intrinsic value, then that is going to be the underlying strategy. Nothing changes. The stocks can change, but the strategy will always be there. So that is what we mean when we say small cases are backed by very specific strategies. Then the fourth one is it's a basket of well-researched stocks. Now, what do I mean by this? Whenever one of these entities on the platform, for example, HDFC Securities research team, curates their own portfolios which are available on the platform. So the research team comes up with stocks after doing a thorough analysis of be it fundamental or be it on the technical aspects of these particular stocks. Then, as we had discussed, small cases are always backed by a SEBI registered manager. What we mean by this is that small cases have been designed by those entities who have one of these 3 SEBI licenses. So with this said, small cases already offer an inherent advantage to picking single stocks or investing in single stocks from a risk perspective. So now with that said, what are the things that we can understand about small cases, or for example, all of us can understand about small cases before we start our investing journey in them? The first thing is the list of stocks inside the portfolio will be displayed to you readily in advance before you invest in a portfolio. So what are the set of stocks that are a part of the portfolio? What is the weightage of each stock will be made available to you. So you can take an informed decision before you start your journey. Second is we tend to take the performance of a portfolio and compare it with an index and show the performance to you, which we will be seeing on the main platform very shortly. So what I mean by this is, now let us say there is a portfolio, there is a small case which has delivered 20% return in the last 1 year. Now, how do we know if 20% is a good return or 20% is a very average return? So we can understand that only by trying to understand what the market has delivered. For example, if the market has delivered, when I say market, I mean a benchmark index like Nifty 50. Now, let us say the market has delivered 12% return and there's a portfolio which exists which has delivered 20% return. So we can claim that the portfolio has delivered higher alphas, because of which it's a good portfolio. Similarly, if there is a market condition where the market has delivered 12% return, but the portfolio has delivered 10% return, then we can readily say that the portfolio is underperforming the market. So actually speaking, the way we go about understanding portfolio's performance is by comparing it with a benchmark index. That's how we understand the true nature of the portfolio with respect to performance. So this data, both be it the portfolio's performance, be it the index's performance, is readily available on our platform. So apart from this, every small case undergoes something called rebalancing. Now, what do I mean by rebalancing? Let us say all of us start our investing journey in a portfolio, in a small case, which has 20 stocks inside of it. This is a very hypothetical example. Now, out of these 20 stocks, let us say all the 20 stocks are good as per today's market condition. But we all know that markets keep changing, they're dynamic in nature. So maybe 6 months down the line, things start changing. And maybe one or two of these companies are not performing well, or one of these, or they have some sort of internal issues, fundamental issues, whatever it might be. So in such cases, we need to remove those stocks from the portfolio and we need to replace it with other stocks. This process of removing stocks from the portfolio and replacing it with other stocks which are going to follow the criteria is called as rebalancing. And on the Smallcase platform, every small case undergoes this process of rebalancing. So rest be assured, the advisor who has designed this particular portfolio is constantly checking the portfolio, is constantly ensuring that the portfolio is in line with his own philosophy of investing in the market or their own philosophy of investing in the market, and that continues over a period of time. So now with this said, the only way to understand small cases practically is to head over to the platform and take a look at some of these premium portfolios that we launched. So what we'll do right now is directly jump to the platform and take a look at the portfolios. So once you come over to the HDFCsecurities.com homepage, so the first thing that we need to do is head over to the research component of it. So under research, you will find basket ideas mentioned right over there. The other thing to do is you can readily head over to basket investing option available here and click on it. So once you click on basket investing, the system will redirect you internally where you will find the page which you can see on the screen right now. The page will be listed with all the small cases that are available on the HDFC platform. So these are essentially all the portfolios that we have covered in many of the previous sessions. But there are free access portfolios on the platform which are available for investors who want to get a taste of what small cases are, get an experience of investing in small case. And there are premium portfolios on the platform which are meant for more serious investors who want to follow a particular advisor and also stay invested in that philosophy for a prolonged period of time. So there are two different types of, these are the two classification of portfolios available. So under all small cases, under subscription type, if you click on free access small cases, the list of all the free access portfolios are available here. If you click on fee-based portfolios, that is the premium portfolios, the list of all the premium portfolios will be made visible here. So there are 4 premium portfolios we have available on the platform as of now. So the first one goes by the name of Cyclical Bets. The second one goes by the name of Listed Venture Capital. The third one goes by the name of Abacus Smart Flexi Cap. And the fourth one is Wealth Compounder by Piper Serica. So now let us try to take a look at each one of these portfolios and try to understand them better. So the first portfolio goes by the name of Cyclical Bets. So let us try to understand in detail what this portfolio is about. The name says, or the name suggests, cyclical bets. So what does that mean? Generally, any business is associated with a business cycle. So for example, all the pharmaceutical companies will be associated with its pharma business cycle. The banking companies might be associated with the banking business cycle. And ultimately, what I'm trying to say is every sector might be associated with its own respective business cycle. And not only that, all of these are also interrelated to the economic cycle that is out there. So what this portfolio is trying to do, what Cyclical Bets is trying to do, is it is trying to find out those sectors or those stocks which are likely to outperform in the future because of a turnaround which is happening in its own respective business cycle. So that is the agenda or the idea of the portfolio. So the underlying philosophy is to find such stocks in the market where that stock's respective business cycle, for example, if it's a paper manufacturer, then paper manufacturing will have its own business cycle, and at the same point of time, that company might be impacted by demand and supply of paper coming in the market, which could happen because of a variety of reasons. And by the way, there is a paper manufacturer in this particular portfolio. So those are the kind of stocks which are being selected and added into this portfolio. And if we try to take a look at the number of stocks that are available, It's a well diversified portfolio of approximately 20 stocks. So now the idea here is that we pick 15 to 20 stocks belonging to a variety of different sectors, which are expected to, turn around and deliver, or have a positive business cycle. And the expectation is to hold this portfolio for the medium to long term. And here, another thing is, we also tend to look at, in the sense the advisor tends to look at a couple of other things. For example, good governance practices could be one thing. A good balance sheet or a sustainable balance sheet of the company is the next priority. And the third one should be that these companies which are present in the portfolio should be past down cycle survivors, which means that they should have weathered through if the previous business cycle was on a downfall, the company still should have sustained that. So those are the things that are looked into when choosing stocks for this portfolio. So the recommended ticket size for this portfolio is roughly about 5 lakhs. But investors who want to start off can start off with as low as 57,000 or 58,000, which is the minimum ticket size for this portfolio. But eventually, the idea here is that investors start parking more and more capital into the portfolio so that the cost structure of the portfolio reduces. Now, before we talk about the cost structure, let us try to understand the performance of the portfolio. So now, this portfolio has been around for roughly 2 years on this platform. And in these 2 years, if we compare the benchmark index, so equity small cap is the benchmark index that we are comparing it with, because cyclical bets at the moment is mostly made up of small cap stocks. So it becomes naturally, easy for us to compare it to the small cap index. So in the last 2 years, the small cap index has delivered roughly an 18% return. So if we take a look at the graph, every calculation starts from 100, and whatever is the value that 100 has appreciated to, that difference is the percentage growth of the portfolio. For example, if 100 is the starting value of the portfolio and the portfolio value goes to 200, that means that the price of the portfolio has doubled. That means investors who started investing at 100 have basically doubled their investment. So with that said, cyclical bets has delivered somewhere around 113% return in the last just 2 years, whereas the small cap index has only delivered roughly 18%. So actually speaking, this portfolio has delivered approximately 10 times more return than the benchmark index, which normal portfolios find very hard to deliver. That is a significantly good alpha. So we say that portfolios are good if portfolios can deliver, for example, 20% return when the benchmark index has delivered 10% return. Such portfolios are considered generally good, but this portfolio has managed to deliver a 10x return. So that is something to keep in mind. Again, if we take the latest 1 year performance, equity small cap has actually given negative returns of 1.5%. In the sense, it has corrected by 1.5%, which is shown in the yellow line here. Whereas cyclical bets has actually given a positive return of 30%. So again, even when the benchmark index has given a negative return, the portfolio has managed to deliver what we can only call a significantly good amount of alpha. So with respect to performance, this has been a phenomenal portfolio that has been made available to customers of HDFC. And anybody who wants to get started in such kind of portfolios can come over to this page or talk to your relationship manager, and they'll be able to guide you to this portfolio. So now, in order to understand the fee structure, let us click on See All Plans and Benefits. So as we can see here, the 6 months plan comes at a 12,000 rupees flat fee, and the 1 year plan comes at a 20,000 rupees flat fee. But again, there are discount coupons available. There's a 30% discount coupon available. So if you reach out to your relationship manager, they'll be able to provide it to you. So whatever fee you're seeing on the platform, the discount can be applied on it. So, and this fees is inclusive of GST and everything else. So the ideal amount that everybody needs to invest in this portfolio is approximately 5 lakh rupees. Again, we do understand that 5 lakhs is not easy for all of us to start our journey with. So you can start off with a very small ticket size, something in the tune of 58,000, and eventually start parking more money into the portfolio, maybe month on month, maybe quarter on quarter, whenever you might need to, and start building your portfolio. So this is one of the portfolios that we wanted to discuss today. So let us go ahead and take a look at the second portfolio available on the platform, which goes by the name of Listed Venture Capital. So now listed venture capital is a portfolio that has been curated by an entity called Lotus Dew Wealth. So listed venture capital is essentially a portfolio where we identify stocks. We identify small cap stocks, in the sense the advisor identifies small cap stocks wherein the board of governors or the governing body is a very qualified governing body. So this could mean that they have prior experience leading bigger firms and have now migrated to or have now moved on to leadership positions at smaller organizations. So the idea here is that they will be able to guide these organizations better, and and these smaller companies can have a good growth rate going forward. So this is one of the most important filtering criteria. There are other filtering criteria also. So there is a proprietary database that Lotus Dew manages, via which they track the movement of industry leaders and industry veterans, which helps them make better decisions for this portfolio. So now, apart from this, there are a lot of smaller things, like for example, they employ big data analytics to quantitatively select governance standards inside the portfolio. It becomes very technical at this point of time, so it is better if you would like to maybe come over to the page once the session is over and take a detailed overview on it. But essentially, what this portfolio is trying to do is select smaller companies which can grow big or which can have good growth potential, because it is being led by people who have industry experience having led bigger companies like MNCs and so on. So now, if we talk about the performance of this portfolio has been around for roughly 4 years on the platform, and in the last 4 years, equity small cap index has delivered 77% return in total, and listed venture capital has delivered 273% in total. So again, coming to alphas being generated, excess returns being generated, this portfolio has managed to do very, very well. Again, if we take a look at the latest 1 year performance, equity small cap has given a negative 1.5% return, whereas listed venture capital has given a positive 19% return. So all in all, the portfolio has managed to do very well even during turbulent market conditions. So this portfolio CAGR, what we call as the average return per year, it's called compounded annual growth rate. We can more or less think of it as an average return per year. So this return works out to be somewhere around 43%. So this does not mean that this is the return that you can expect all the time going forward. This is the historical CAGR of the portfolio. So this can vary with time. It can even go down a bit. It can go up a bit. It can stay stagnant. But this is the historical performance. So the minimum investment amount for this portfolio starts at 41,000 rupees. And if we take a look at the plans and benefits, the 6-month subscription, including GST, will incur a fee of 6,844 for you as investors, and the 3 months investing duration, the plan, would incur a cost of rupees 3,776. Again, this is the minimum ticket size of 41,000. This is not the recommended amount. The recommended amount would be far higher than this. So the more amount you invest in the portfolio, the lesser the cost seems to be. For example, if you are paying, let us say roughly 12,000 for this portfolio as an annual subscription, just as an example, then in such cases, if you've invested somewhere around 6 lakhs in the portfolio, the cost of the portfolio works out to be just around 2%, which is the flat fee. So keeping that in mind, the more you invest, the better it is in such kind of baskets or portfolios. So this is a portfolio that we would readily like you to explore. Then coming over to the third portfolio, which goes by the name of Abacus Smart Flexi Cap. So again, Abacus is a very, very well-known name in the industry. Abacus stands for Abacus Investment Advisors, which was founded by none other than Mr. Sunil Singhania, who's a market veteran, who was also the ex-chief investment officer at Reliance Mutual Fund. So Abacus has launched a portfolio which goes by the name of Abacus Smart Flexi Cap. So this is a portfolio where the ticket size starts at 5 lakh rupees, and customers will incur a charge of 2.5% on the invested value over a period of 1 year. So this 2.5% will not be charged upfront. It will be charged on a monthly basis, not the entire 2.5. The 2.5% will be divided by 12 months. So approximately 0.21% will be charged on the average AUM that you're holding in the portfolio every month. So for more insights into how this particular pricing structure works, it is better to reach out to your relationship manager. So now let us try to take a look into what this portfolio does. So this is approximately a 25 stock portfolio, in which Abacus is trying to find stocks within the top 250 universe. So what do I mean by top 250? I mean companies which have the highest market capitalization, the top 250 companies. So these are the companies that Abacus wants to choose from because of liquidity, because of higher liquidity, and generally these companies tend to be more stable. Also, at the same point of time, they're not restricting completely to the top 250 companies. If there are opportunities to select from other in the sense top 250 companies, they will still be chosen. But you can expect that the most of the portfolio has stocks which have been chosen from the top 250. Now again here, this portfolio has something called as a bottom-up approach analysis to it. So what this means is generally the stock is identified first, which Abacus wants to start their journey with based on fundamental analysis, and then they look at the sector, whether the sector is good, and then they look at macroeconomic conditions. So this is the reverse of what most of the fund managers do. If we take a look at most of the other fund managers, they take a look at the macroeconomic picture first. It could mean political stability, it could mean Fed rates, it could mean repo rates, it could be so many other things which are happening on a macro level. And then they boil it down to how the sector is doing. And if they're happy with how the sector is expected to perform in the future, then they boil it down to which stock they want to choose from that sector. This is called top-down approach, but bottom-up approach is the reverse of this, and that is what the portfolio is trying to achieve here. So they have mastered bottom-up approach because their historical performance speaks for itself. And Sunil Singhania's track record, even as the CIO of Reliance, has been quite phenomenal. All of you can maybe go ahead and research about Reliance Growth Mutual Fund and how it managed to deliver 100 times return to its investors in just 21 years. That was created, or Sunil Singhania, had a major part to play in that particular portfolio. So again, it's the same fund manager who is coming with more or less the same philosophy and designing this portfolio, which is Abacus Smart Flexi Cap. So now each stock that is chosen into the portfolio typically has a 3 to 5 years holding period, not mandatory, typically. So generally, if you're an investor in this portfolio, you can expect to hold most of the stocks to between 3 to 5 years. And now there is another philosophy that Abacus follows. This is something called as the MEETS framework, that is MEETS, MEETS framework. M stands for management, that is quality of management, management of the organization. E stands for earnings, whether the earnings of the company is growing or not. The next E stands for events, which means are there positive events being triggered for this particular stock or sector, or are there negative events being triggered for it? That is taken into consideration. T stands for timing. It does not mean timing the entry and timing the exit. That is not what timing means. Timing means selecting stocks which are trading below its intrinsic value and holding them for a specific period of time. So that is what timing means. And S means structure. For example, they're trying to understand if this particular company that they want to invest in has a moat to it, MOAT, which means are they having any competitive advantage or competitive edge in the market? So this is what the MEETS framework basically means. So Abacus is the MEETS framework is something that I've personally known only Abacus to follow, and this has worked out very, very well for them. And again, in this portfolio of roughly 25 companies, single stock exposure is always less than 10%, which means no stock can hold more than 10% in the portfolio. And sector exposure is 30%, which means no sector can hold more than 30% weightage in the portfolio. This is to make sure that diversification has happened very well. So now again, this portfolio has been live for more than a year on our platform. And in the same time duration, equity multi-cap has delivered a 10% return, whereas Abacus Smart Flexi Cap has managed to deliver a 15% return. Again, this is meant for customers who can start with a minimum ticket size of 5 lakh rupees, and those who are already aware of the name Abacus in the market. So the next portfolio we have goes by the name of Wealth Compounder by Piper Serica. So this is a fairly simple portfolio. What it is trying to do is trying to capitalize on the youth population in India and the demand that the youth population is going to produce going forward. So as we know, the majority of Indian population, which is 60% of Indian population, is less than the age of 35 at this moment. So this younger population is what will create demand going forward for goods and services. So Wealth Compounder portfolio basically tries to identify these natural compounders of earnings which can produce above average returns. What I mean is they're trying to identify sectors and stocks which are going to be affected because of demand coming in from the younger demographic population in India. So this is a very simple portfolio that aims to achieve that. So this portfolio has a 3-year CAGR of 15%, 15.6%, which is the average return that the portfolio is delivering every single year. So those who wish to start, the minimum ticket size is 2 lakhs for this portfolio. And if we take a look at the fee structure, the 3 months fees is 3,540. This is inclusive of all charges. 6 months is 6,490 and 1 year is 11,800. So this is the fee structure of the portfolio. So these are the 4 premium portfolios or premium baskets that we wanted to introduce to all of you on the HDFC platform. So hopefully once this session is over, all of you would be eager to head over to the platform and take a look at some of these portfolios. So now a couple of other things to know when you start your investing journey in Smallcase or baskets available on the HDFC platform. You don't have to open any new accounts. You just need to have your HDFC account active and ready. And these stocks or these portfolios are integrated directly with your HDFC account, which means that every time you invest, money which needs to go into the portfolio is debited from your own trading account, and stocks which need to come to you are delivered to your HDFC securities demat account. So you are the owner of the stocks that are a part of this portfolio. And as usual, whenever this portfolio pays out dividends, which means the stocks which whenever they pay out dividends, the dividends are credited to your bank account directly. So now, with that said, thanks a lot for taking your time out and coming over to this particular session. If any of you have any questions, feel free to post it in the chat box. If there are any questions in the chat box, we will start taking it up. So now, the first question is, please confirm whether small cases are available for NRI segment customers. If no, when will they be made available? So this is a tricky question. At this point of time, it would be difficult for an NRI to start their journey, in one of these premium baskets. Again, the best person to answer that would be a relationship manager. Depends on which portfolio you want to get started with. Apart from the fee structure, do I have to still pay the brokerage charges? Yes. So you won't be incurring the brokerage charges every now and then. It will just be at the time of investing in the basket and at the time of exiting the basket, and very minimal brokerage that could become a part of the rebalancing of the portfolio. But essentially speaking, that should not amount to much. What happens to corporate actions like splits, dividends, right issues? Everything will get adjusted. We have teams on the back end who will adjust everything for you. So not to worry. Small cases have been around for 7 years now. So how often should we rebalance? That really depends on the portfolio. So there are some portfolios hope my screen is still visible to you. So for example, if I click on cyclical bets and next to overview, there is a section called stocks. So if I click on stocks, I will be able to see the rebalance frequency. So for this portfolio, the rebalancing frequency is monthly, which means that last rebalance happened on April 24, 2023, and next rebalancing is happening on May 22nd, 2023. And if all of us can click on the view rebalance timeline, we can essentially see if rebalancing is being initiated or not. So it is not mandatory that a rebalancing will happen every month in this portfolio if monthly has been mentioned there. What it basically means is that the fund manager, the advisor is trying to review the portfolio. So as we can see here, February 21st, 2023, 2 stocks were added. +2 means 2 stocks were added into the portfolio. 2 stocks were removed from the portfolio. March 24, 2023, they reviewed the portfolio. The portfolio was good as it is. No changes needed to be made. So over here, no change has been mentioned. April 24, 2023, again, no changes has been mentioned, which means that the advisor reviewed the portfolio. They found the portfolio to be good, so no changes had to be made. So again, the next review is on May 22nd, yet to be seen what happens. So similarly, if you go to any portfolio on the platform, let us say you go to listed venture capital. So over here, again, once we click on listed venture capital, we'll have to click on stocks and weights, and you will be able to see the rebalance frequency here. So here it says need basis, which means there is no fixed schedule. It can happen at any point of time. And if you click on view rebalance timeline here, you'll be able to see that. So October 6, 2022, 1 stock was added, 1 stock was removed. October 7th, no changes were made. May 2nd, 2023, that is just a couple of days back, 3 stocks were added and 3 stocks were removed. And the next review or the next rebalancing will happen whenever the fund manager wants. So this, how often should we rebalance, is a very tricky question, because it really depends on the portfolio. It depends on the fund manager, what they are trying to do and at what point of time. That is what it depends on. So now let us move on to the next question. Are the dividends of the stocks included in calculating yearly returns of the small case? No. So the yearly returns of the small case is only the price return. Dividend returns are extra returns that you make for the portfolio. So now let us try to see where to understand or where to get the dividend return. For example, I'm on this portfolio called, so let's go to the first portfolio. So, or let's go to this portfolio by Abacus for sake of a different portfolio. So now Abacus Smart Flexi Cap is a portfolio where the returns are just price-based returns. If we as investors want to find out the dividend for the portfolio, we will have to head over to this fact sheet button. So when we click on fact sheet, a downloadable PDF opens up, as we can see here. And in this PDF, when we scroll down, we will be able to see this ratios column, wherein the dividend yield of the portfolio will be mentioned. So as you can see here, this small case has a dividend yield of 1%. So that is an additional return that you will be making as dividends on top of the price return that is being displayed over here. So hopefully that question has been answered. Can I get the MTM on a daily basis? Yes. So for example, if I head over to investments, let us take a look at some random portfolio which we had invested in long back. So the current value of the portfolio is displayed here. The total returns is displayed here, percentage wise as well as rupees wise from the date of investing, and the XIRR returns is also displayed here. So whenever you invest in any particular portfolio, you will get all the details with respect to how much your portfolio is growing by heading over to the investments tab. How do we exit from the basket? Very simple. You can exit whenever you want from the basket. There are no lock-in periods. If you have started your investment today, you can exit from your basket today itself. So the process is fairly simple. We have made multiple videos about it in our. So you can go to the HDFC official YouTube channel and try to search for how to exit from a small case basket. You will find these videos available. You just have to go to investments, and under investments, you will have your portfolio available. Click on the portfolio. On the right side, you will have an exit option available. Just click on it and you will manage to exit out of the portfolio. As simple as that. Additionally, you can ring up your relationship manager or reach out to us at a small case or at HDFC, and we'll help you exit the basket. But actually speaking, it's just a 1-minute process if you log into the platform and go to the investments tab. Can I sell shares? Can I part sell shares in small case portfolio? So now we'll have to understand this with an example. Now let us say Cyclical bets is a portfolio that you want to invest in. The minimum ticket size of the portfolio is roughly 58,000 rupees. So if you have invested only 58,000 in the portfolio, partial selling will not be possible, because that would change the structure of the portfolio. You might have to get yourself out of some stocks. So if you have invested any amount more than 58,000, that excess amount can be exited at any point of time, but the minimum investment amount always has to be maintained. So if you don't want to maintain the minimum investment amount, the best thing to do would be to sell off the whole portfolio. But selling a part of the minimum investment amount is not recommended. But although it is your shares, the stocks will come to your DP ultimately. So if you really want to sell even from the minimum investment amount, you want to decrease it even more, the ultimate control lies with you as the investor, because it is your stocks, it is your shares, but that is not recommended. You always have to maintain the minimum investment amount. Anything more than that, you can always liquidate. So that won't affect the portfolio's performance. Okay. So are there any other questions from the audience today? No. All right. So thanks a lot, everyone, for taking your time out and coming over to the session. It has been a pleasure interacting with all of you, and I hope to see all of you in a future session maybe. Thanks a lot, everyone. Take care. Bye.
Thank you, Pranav, for joining us. Thank you to all the customers for attending the webinar. Have a great day.
You too. Bye.